Hi, welcome to Pennsylvania Newsmakers, and as always, thanks for watching. Well, the big debate continues over how Pennsylvania chooses its electoral votes and how are we going to do legislative and congressional redistricting, and then our popular financial literacy update, all of that and more when Pennsylvania Newsmakers returns.
This is Pennsylvania Newsmakers, a fast-paced, unrehearsed weekly discussion with and about the leaders who shape your world. And now, here's your host, Terry Madonna.
Hi, welcome back to the program. Well, joining me as often is the case is Pete DeCoursey, he's the Bureau Chief from Capitolwire, and Laura Olson, she's with the Pittsburgh Post-Gazette. Reporters, both of you are reporters. Look, there's a huge story that has been brewing now for several weeks. It has to do with how Pennsylvania chooses its electors. Pete, I'll start with you. Out of the clear, the majority leader of the Senate, with no prepping and no background, says he wants to change the way Pennsylvania chooses its electors from the winner-take-all. Presidential candidate with the most votes will win all of Pennsylvania's 20 electoral votes, to picking them out of congressional districts, and of course 2 will go to the popular vote. Peter, what is that all about?
Well, essentially what has happened is Pennsylvania Republicans are tired of, for the last 5 presidential elections, giving 46 to 49% of the vote to their guy and getting nothing. And they're not sure that they're ever going to get anything, because every 4 years, Philadelphia voters, particularly black Philadelphia voters, and suburban independent women, as you know, and young people vote. Other than that election, they go back to sleep. It's a Rip Van Winkle thing.
Right.
So you can win Pennsylvania as Republican for governor. Right. You can win as a Republican for U.S. Senate. But for now 20 years, you can't win Pennsylvania.
Since 1988.
For president, and so they want to fix it by going to the Maine and Nebraska system, which allows you, if the voters do it, to split up the vote.
Now,
so it would have a huge effect. It would change the 2008 election from 21 to nothing Obama to 11 to 10 Obama. Yeah, and since you need 270 to win,
but it will not. But the net effect is it would not have affected a single presidential election
since 1916. Yep.
No, well, maybe you'd have to go back to 1876. We can argue about that. But let's talk about how. Go ahead. I want to get the question out. You're ready to talk. Go ahead, Laura.
Well, the Democrats were very quick to say, you know what, we really don't like this plan. This has worked pretty well for us so far.
Because they've won, maybe?
We really like getting 20 votes, as they would if they win the state next year, as opposed to 10 or 9 or some smaller amount, as Pete pointed out. It would be basically like dividing the state in half in some sort of formation like that. Right. And so Rendell says, you know what, this is going to lose our clout. If instead you're talking about 10 votes or 9 votes instead of 20 votes,
that's right.
That's a lot of...
But, well, no, there's 2 questions. Hold on a minute.
You're talking about a net effect, because if we end up going to this, you can come out of Pennsylvania with a win of 2 votes or a win of 4 votes, which means that we have, in terms of margin, we become the size of Dakota and Montana, which don't get the tens of millions of dollars of presidential campaigns we get.
That's my point. Will this be a disincentive for presidential candidates to campaign in Pennsylvania, for the voters of our state to, be engaged in the presidential campaign?
For the 2/3 of the state which always selects a member of the same party, yes. Yeah. For the 7 or so districts that can flip, it'll be very different. I wrote it last week, about the Nebraska 2nd District in Omaha, which has a congressman by the name of Lee Terry. And Lee Terry always had nice, safe re-elections, 64, 61. Then Obama realizes, hey, because Nebraska has this one,
we can win Omaha.
So Obama goes in, dumps a huge amount of money, and Terry goes from 61 and 64% to 52%.
Let me follow up with this. The marginal competitive congressional districts in Pennsylvania are currently held by Republicans, not by Democrats. Does that mean now that the Democrats dump all this money into these marginal districts and put the Pennsylvania Republicans even more at risk? Is that a concern?
Well, and that's where the other pushback comes from. You don't often see Jim Gerlach and former Governor Ed Rendell on the same side of something. But that's the concern for these suburban Republicans.
And Jim Gerlach represents the 6th Congressional District, Chester County, exactly. Some of Berks County, some of Montgomery County. Go ahead.
And so if there's suddenly this influx of Democratic dollars into the swing districts, they're worried that down the ballot is where we actually see the impact in the congressional races and then in the local races.
All right, we're going to run to a break. I have a bunch of more questions here before we get the redistricting. All right, we'll be back in a moment. Good job.
This broadcast of Pennsylvania Newsmakers is presented by the Pennsylvania Chamber of Business and Industry, the statewide voice of business, and by the Pennsylvania Cyber Charter School, bringing educational innovation and freedom to the children of Pennsylvania. This broadcast of Pennsylvania Newsmakers is presented by ReconnectPA.org, supporting a comprehensive transportation funding solution, and by the Pennsylvania Manufacturers Association. Business in Pennsylvania is our business.
Hi, welcome back to the program. Well, we're on this whole business of changing the way Pennsylvania chooses its electoral votes. It's complicated and it's controversial. Peter, Laura brings up Jim Gerlach. Could we not add the 7th Congressional District, Pat Meehan, the 8th Congressional District, could we not add
Charlie Dent?
Charlie Dent up in the Lehigh Valley.
And don't forget Mike Kelly out in Erie.
Probably a little more safer, but Lou, go ahead.
Look at Obama McCain in that district. It was a couple of hundred votes, Obama McCain in that district. A couple of hundred votes, and Kathy Dahlkemper won
all right,
that year.
What we're doing here is going after other competitive congressional districts that both of you think the Democrats would pump. Why bother with getting the turnout up as a whole, right?
That $10 to $20 million that each party spends on the presidential race, and I'm saying in the broadest sense,
I get it.
All the allied groups and stuff, that would instead go largely to 5 districts. Now, those districts also have a number of the competitive races for the lower thing, but not all of them.
But it also, as
and
both
the parties are very...
As both of you have pointed out, and Laura mentioned this a moment ago, this could have, once you get that kind of money and that energy, this could have down ballot. This could affect legislative races as well. No? Yes?
In 2008, the best line I heard was Mark Holman, the former aide to Governor Ridge, who said, all politics is now national. This will further nationalize politics. This will further nationalize it. We're going to end up in a British system where we're going to have national referendums in congressional districts.
You agree?
Sure.
All right. Let's turn, in a few minutes that we have left, anything else on this that you have to say? All right. Down the road, this isn't a done, even though the Republicans control the legislature, they have the governorship. Down the road, yes or no, does this pass? I really put you on the spot. You can beg off if you want. It's an unfair question.
I don't know. I don't want to place a bet at this point. You don't want to place
a couple of days left to see. The state party and the congressmen from the Republicans are pushing back hard.
Are weighing in.
But Corbett has 2 levers. He can say to the state party, I will raise you what you're not getting from national.
Yep.
And he can say to the congressman, hey, I'm redrawing your districts right now.
And he's going to protect you.
Or if you make too much noise, he isn't.
Oh, that sounds crazy. I mean, he's going to, on this issue, they're going to put their congressional delegation at risk?
No, but every congressman has a state senator or somebody else or some rich guy.
Who wants to replace them.
And they can draw the district so it helps top replacement.
You've been covering this redistricting thing. Go ahead.
That we heard. Senator Jay Costa, the minority leader in the Senate, was saying, you know what, this is going to turn redistricting into an even more gerrymandered process because all of a sudden you're just going to be drawing the lines so that congressional, so that the presidential
CDs, the congressional districts. So in other words, they now draw the congressional districts in order to win the electoral vote. In order to win the one electoral vote, as opposed to win re-election, or are they similar?
No, they're basically similar, but what they can do is, let's say that you've got a state senator who the congressman hates, and let's say the state senator's district is only half in the congressional district.
Oh, you put them all in.
You can take half of the base of the congressman out and still keep it very Republican, but not keep it Republican Congressman X.
Hold on a second.
Oh,
hold on a second, Laura.
You know the history of the state.
Makes
it's all personal.
No sense, and here's why. It's not going to affect the presidential election. It is not going to affect who the president of the United States is.
It might.
No way, Peter. I'll bet a meal on this. But here's the point.
It might.
No.
There are maps where it does.
No. It's not going to. That's not true. But
there are maps that
bigger point.
Look at Nate Silver.
They're going to do this. They're going to do this. Get into this controversy for such little consequence, in my judgment.
And it's distracting kind of from the larger thing that they still do have to do. They do have to redraw the lines. And that's really the bigger argument.
And so they're going to build internal competition within their, hold on, let me think, within their
punish noisy people. If people are quiet.
Yeah, but then they lose the seat. Then,
no, not if you keep it Republican, but a different Republican.
I guess.
I see
your point.
But you're making the real point here, which is there is starting to be a stink about this. If the stink continues, then it may not be worth doing. And that is part of what Governor Corbett has to consider. But as we know, Governor Corbett tends not to change his mind.
I'm glad you said that and I didn't say that. All right, at any rate, we're about out of time. But look, I'm going to get the last word on this. I normally don't. I give you. I just think the unanticipated consequences of this greatly outweigh the advantages of a few electoral votes in a situation in which it is not likely to have an effect. You will have to get a presidential election so close that 5 or 6 electoral votes will make a difference. Bush-Gore, 2000.
10.
Hold on a minute. If Pennsylvania had split its electoral vote, it would have only helped Bush, who won by 5 electoral votes. It would have given him 10 more. I get the last word. I normally don't. I usually give it to the reporters. All right, our popular financial literacy update is next. We'll see you around the bend.
This broadcast of Pennsylvania Newsmakers is brought to you by Pennsylvania Credit Union Association. Pennsylvania Credit Unions, where people are worth more than money. To find a credit union that is right for you, check out ibelong.org. And by the Energy Association of Pennsylvania, Pennsylvania's energy information source. This broadcast of Pennsylvania Newsmakers is presented by the State System of Higher Education, 14 state-owned universities. The state system is the largest provider of higher education in Pennsylvania. And by the Hospital and Health System Association of Pennsylvania, working towards a healthy Pennsylvania.
Hi, welcome back. Well, we're doing our popular financial literacy update with Greg Smith. He's the CEO of PSECU, and Jim McCormack. He's the CEO of PA Credit Union Association. Both have been on the show. All right, before we get into this Wall Street Reform and Consumer Protection, long title, I want to go, what are we doing with credit card debt? I see this report that we have this staggering $18.4 billion credit card debt in the second quarter of this year. What's that about?
Well, Terry, I went back and looked at the data year over year, and all that we have in the second quarter, the $18 billion increase, that follows a $33 billion decline in credit card balances in the first quarter. Okay. So on net, actually, consumers are still about $15 billion paid down on their balances. And what you saw in the first quarter is, again, a seasonal thing. Consumers run debt up during the holidays and then pay down in the first quarter. You've got tax refunds coming back and things like that.
And we always know what to do with those tax refunds.
Exactly.
Right? We got to pay off the credit card charges for the holiday season and other things. All right, Jim. Let's talk about this whole business. You know, we've had all this concern about Wall Street and what happened leading up to the recession and the degree to which they participated, particularly in a lot of the bad, mortgages on home loans, maybe some business loans, home loans probably mostly. What is the purpose of this reform, the Consumer Protection Act, which President Obama signed into law in 2010?
Well, it's supposedly to protect consumers, but most of the impact were on banks and the few credit unions, very few that are over $10 billion in assets. But there's been some real downside to it. One, you've mentioned mortgage lending. The underwriting guidelines put on by the regulators have become far too strict. In the past, if you had a pulse, you could get a mortgage loan. Now you have to be an Olympic athlete, almost, you know.
So what you're saying is they need to be somewhere in the middle between giving a loan to anyone and both of you are nodding. Go ahead.
Reasonable, right. And the other thing that did come up that credit unions particularly were involved with was the Durbin Amendment that had to do with the debit card fees. And most of the institutions throughout the country will not be immediately impacted, but the consumers, by and large, in the long term will be. And you're going to see the end, is particularly with large banks, large financial institutions, not credit unions, really the end of free checking. But
the end of free checking?
The end of free checking. But credit unions, for example, Greg, we came out pretty good, credit unions, with the Federal Reserve Amendment. What are you guys doing, Greg,
well,
PSECU?
the Durbin Amendment specifically exempts institutions.
He's a senator
from Illinois.
A Democratic senator from Illinois,
exactly.
by the way. Go ahead.
Right.
Get that.
Senator Durbin's amendment to the Dodd-Frank bill actually exempts institutions that have assets under $10 billion. And that covers all but 3 credit unions nationally. And PSECU, for example, is only just a little under $4 billion. So we're not impacted by that. That's given us an opportunity to actually extend services in some areas. What we read is the large banks, as Jim indicates, are terminating their free checking programs, modifying rewards on debit cards, things like that.
Is this all costing the consumer more?
Well, exactly. And Terry, you know, the thing that's a little odd about the legislation is debit cards generated about $15 billion a year in revenue for the banking industry. The idea that somehow banks are going to just walk away from that and not find a way to replace that is just silly.
Yeah, we're going to run to a break, but your point is that but some of these regulations, while they look like they're going to save consumers, are just going to lead to charges in other areas of financial transactions. Am I right about that?
Banks are already raising monthly fees on checking to like $10 a month.
When we come back, I want to ask Jim about deposit insurance. That's something that we all got a little nervous about, you know, given some of the difficulties that financial institutions are having. We'll be back in a moment.
This broadcast of Pennsylvania Newsmakers is presented by Highmark Blue Shield, changing the way health plans work for business with a variety of plan options for employers and more choices for employees. Information is available at highmark.com. Have a greater hand in your company's health. And by the Pennsylvania Healthcare Association, the future of long-term care.
Hi, welcome back. I'm chatting with Greg Smith and Jim McCormack. They're both with credit unions. One heads PSECU and one is head of the Pennsylvania Credit Union Association. We do this financial literacy update once a month. We hope that you find it valuable. You know, leading up, or I should say after the recession hit, a lot of folks got nervous about, you know, financial institutions and what was going to happen to their money. I think the original deal was $100,000 that if you had money in an account in a financial institution, it was protected. What does this Wall Street Reform and Consumer Protection Act deal with that?
One of the few positive things that came out of this really for consumers was increasing deposit insurance for both banks and credit unions to $250,000 per account. So I think that was very positive, and you've seen a lot of money coming into the credit union and banking industry right now.
Now, let me ask you this, so just so for our viewers out there. So if I have an account in my name, that's $250,000. If my wife has an account in her name, that's $250,000. But if we have it like, you know, Terry and Mary Beth Madonna, one account, that's $250,000.
And then
you all got that. You want that protection, you better separate it.
Right.
Am I right about that?
Yeah, and if I had your money, I'd be worried about that too.
Oh, yeah, well, if I had my money, well.
Terry, you can structure it actually so that you can extend the coverage. And if you go to like the NCUA, which is the credit union regulator's website, you can find ways to actually extend that insurance coverage over $1 million, depending upon the number.
See, we always learn something. That's why we have these guys on this program. We learn something every time they're on. All right, one of the things increasingly there are fees that we have to pay. You know, and I don't know if they're going up. I don't do a lot of this. because I don't do much of the financial business in my household, but you put a credit card in, you're not in your bank or your credit card company, association. You go, uh-oh, $250 or what's the latest? What's going on in that area?
Well, again, as a result of the Durbin Amendment and the loss of revenue that the large banks are going to see, we're finding that many of those large banks are increasing the fees to consumers.
Right.
Great thing about many credit unions and PSECU specifically is that we're going the opposite direction. We just announced, our board approved the increase of what we call our ATM surcharge rebate program. Previously, we would give members up to $4 a month in surcharges back. In other words, if they use somebody else's ATM and incurred a surcharge, at the end of the month, we'd look back and those surcharges we'd recover up to $4. We're increasing that to $8 per month for members, but then for members who have direct deposit with us or a Social Security payment that comes in monthly, we're going to $20 a month on those members. That's up to $240 a year that we're giving back to members.
Okay.
That's something the banks aren't doing.
Look, one of the things that you've done over the years when you've been on this program, Jim, is that we've talked about this, and that's the essential purpose of making sure that you read this material that we get from financial institutions. It may be, single-spaced and hard to read, but all these changes in terms, this is really hard for consumers. I don't do a good job of that. I know
it's very difficult, Terry. But,
so go ahead, give us your statement. You've done this before.
Oh, you do have to read the fine print. And for many consumers who don't read the fine print, it's good to know that credit unions are consumer-driven and owned. Mm-hmm. They're owned by the members. So if you belong to a credit union, you own it. So they do have your best interest at heart. But it's important, be it with credit or debit, understand the fine print and read it.
Right. All right. What other, looking ahead now, as we look ahead in this economy, it doesn't look like we're getting out of this recession anytime soon. We got about a minute left. What do you see happening with home mortgages? With are people refinancing because of the interest rates? This is a important topic, I think.
We in August, just this last month, we had our record month for mortgage financing. Most of it, Terry, was refinancing. Not a lot of new purchase activity, but I think we did something like nearly 600 mortgages in the month.
And if you were to say, if I were to ask you, we've got about 30 seconds left, what difference, interest rate differential should you begin to look at? 1%, 1.5%,
Generally,
2%?
because of the fees involved in a refinance, you want to get at least a quarter point.
A quarter
reduction.
point?
Quarter pointed.
Yeah.
All right. Well, look, as always, thanks for a great update. All right. We'll see you next week for another edition of Pennsylvania Newsmakers. And as always, stay well.